Good afternoon, ladies and gentlemen. My name is Cindy Bonnier, and I'm the CEO of the Fremont Chamber of Commerce, and we appreciate you taking a little time out this afternoon to spend with us. We're currently waiting for the Assessor Law to join us. He managed to squeeze us into his very busy schedule, so we're trying to be patient for him while he shows up. And look who, speak of the devil there, shows up just as I'm saying his name. But I will introduce the assessor in just a moment, but it's good to see you, Assessor Locke. Thank you so much for joining us. I just want to, again, welcome all of you here today. And I want to especially thank our Chairman Circle sponsors whose dedication and support of the Chamber make it so critical for our continued success and for us to offer programs such as this. And those companies are Facebook, Washington Hospital Healthcare System, Kaiser Permanente, Robeson Homes, and Pacific Commons. And thank you to them for their generosity. So it looks like in interest of everyone's time, we have a hard stop at 2 because I know the assessor needs to move on to whatever it is on his schedule next. So it was with a great deal of pleasure that I introduced Phong Law. Let me just give you a little bit of his background. He was elected on November 6th in 2018 to serve as the assessor for the County of Alameda and is committed to making government work for the people of Alameda County. The work that the assessor's office helps generate revenue for Alameda County, its 14 cities, and 6 unincorporated communities. These major funds provide for crucial services such as schools, public health, social and family support, services, fire, police, sheriff departments, road maintenance, neighborhood improvements, and more. So the whole ball of wax right there. Phong obtained his Bachelor of Science from the University of California at Davis and his Juris Doctor from the University of California, Hastings College of the Law. Phong has worked as an attorney in one of California's largest real estate law firms for the United States government, for a privately held real estate holding company, and his own small business. So with that, it is my pleasure to introduce Assessor Phong Law today. And we are going to start with a presentation. And then the assessor has agreed to take your questions. So if you would like to start posting those in the chat room as they come to mind, you're welcome to do that. And we'll get through as many as we can within the time that we have. So with that, Assessor Law, thank you so much, and I'll turn it over to you.
Thank you so much, Cindy, and thank you to the Fremont Chamber for inviting me here today to speak with you. I just want to give you a real quick background on me and my relationship to Fremont. I actually grew up in Union City. I graduated from James Logan High School, and then when I went to college at Davis and law school, after graduating, I wanted to come back home to the county and to give back in some way. So I actually started living, I moved to Fremont after law school, and I lived in Fremont for about 10 years. I served on the City of Fremont's Human Relations Commission for a while as well. I was appointed to that commission by Mayor Wasserman. May he rest in peace. He was a very good man, and I appreciated working with him during those years. And I came to the assessor's office not necessarily by my own choosing. It was something that I felt like was, in a way, a calling. I had family businesses in the area. My mom's very first business was in Fremont, a little furniture store, back when I was a boy. My father opened up his own company, a machine shop. And after college and law school and working for the different places that Cindy had said, I was trying to help my parents out during the Great Recession. And part of it was reviewing the assessment from the assessor's office for my family businesses. And I realized that my father's business, just to name one, had been overassessed by over $1 million a year. And being an immigrant and a refugee to America, English wasn't his strong suit. You know, as a teenager, I was negotiating the leases for my mom's store in Fremont. And I realized that this wasn't right. And so I would file appeals on behalf of my parents' businesses and on behalf of one of our buildings in Fremont. The assessor wouldn't agree to the reductions I had asked for, so we'd go to appeal, and I would win the appeal every year. And I always thought this just didn't seem right. I wanted to do more. And in 2009 and 10, during the height of the recession, I also started a free legal clinic to help people who are losing their homes in Alameda County. And we tried our best. And unfortunately, the assessor's office at that time was inundated and was not as proactive as it should have been. And I just said, if this job ever comes up, I think this is something that I should do. in order for me to give back and to make sure that property owners and business owners are treated fairly. So fast forward 2018, I'm blessed to be elected, and I come in right at the start of COVID in 2020. And that's part of what I want to talk to you about today, is how my office is trying to be proactive in these property tax assessments because of COVID, but we need your help. I can't just willy-nilly reduce values. I actually need data. I need your data. I need you as business owners to tell me what is happening at your businesses. I'm going to go over that in a few minutes. The other thing I want to talk about, I'm going to try and share a screen here, is Prop 19. Prop 19, I've been getting a lot of questions about Prop 19, and it's administered by the assessor's office, but it was passed by the voters. So for those who are not happy about it, all I can say is it wasn't my call. Whether I agree or disagree with the law, I'm charged with the responsibility to administer it. And that's what Prop 19 is for us. It is a change in property tax law, a huge change that we haven't seen in 40 years. And we're trying to administer and give as much information, educate the public as much as possible so that you can make an informed decision with you and your family. So an overview of the assessor's office. First and foremost, I got to start with a disclaimer that this is just informational purposes only. Don't take this as legal advice. This is not a substitute for obtaining good legal advice. So talk to your tax lawyers, talk to your CPA and your accountants when you're making a lot of these decisions about your business and your property. The role of the assessor is to identify and locate all taxable property in Alameda County and determine a value for which property taxes are determined. There are three people who are ultimately responsible for this at the county. The assessor, my job is to identify and put a value on that property. The auditor controller then puts a tax rate on it, and the tax rates are different depending on where you live and where your property is. So your business being in one city or another could have different tax rates. And those rates are determined in large part by the state and by the will of the voters. Voters in each tax rate determine some of their charges. Special assessments or liens are then added to the tax bill, and then those tax bills are sent to you by the tax collector, and that's ultimately his job, is to get the money in to the county. Where does that money go once it comes into the county? The county is just holding the money and then redistributing it to different areas. 42% of your tax dollars, your property tax dollars, goes to the school district that your business or your property is in. 18% goes to the city, 15% stays with the county, 13% of it generally goes to special districts. Think of the water district, in Union City, they have the Union Sanitary District, and other special districts. Some cities have fire districts. And then 12% goes to redevelopment or those successor agencies, since redevelopment was removed by the prior governor. But they still have successor agencies that are still funding a lot of those projects that were passed years ago. So there are two types of property that we deal with. And as business owners, you have two types. You have the business personal property and the real property. Real property is what it says. It's the building, it's the land. Business property are all those things that you use for your business. Your computers, your desks, your chairs, your machinery. And there are a few things that are not business personal property. I want to make clear what those are. Your inventory for your business is not included in business personal property. Any household furnishings, your couch in your house, your bed is not. Personal effects, if you can look behind me, I have picture frames of my family, my kids, my daughter and my wife. Those are not personal property. Those are not business property. Those are personal effects. Pets and software typically are not included as taxable business property. We're typically looking at operating supplies, machinery, equipment, fax machine, if you still have a fax machine, that's kind of outdated, copiers, telephones, anything of that sort. Some of the larger pieces of business equipment are restaurant equipment. You see hair salons, nail salons, all that equipment. That's all taxable business property. How does the assessor know what business property you have? Each year, you'll get a notice from us. It'll either be fill out this form, a 571L, and let us know what's there. And you're required by law to do so. And the assessor has the legal authority to ask for you to fill that out. And we heavily depend on that. And I'm talking about about COVID going forward this year. I really need this information from you in order to determine if we're going to give you a reduction in your business personal property assessment. So I'm asking you to please fill this out if you get it. Some of you will get a letter that says, you don't need to fill this out. We're just going to use your value from last year if there's no change. So what will happen is you'll check a box, and this is typically if you have less than $100,000 of business personal property that says there's no change, or you'll check a box that says, I have a change, send me the 571L form, and I'll fill it out for you. If you have changes to your equipment, let us know, right? You bought new equipment, you sold equipment, you disposed of equipment, especially if you dispose of equipment, because then that will reduce your property tax liability. Let us know when there are changes. It really is to your benefit to inform us of this stuff. You have until April 1 to let us know. And then you have until May 7th to let us know without a penalty. We treat April 1 as the first deadline because, as you can imagine, we have 50,000 businesses in Alameda County. I have less than 30 auditors in the office to go through all 50,000 businesses to try and get an accurate depiction of what is in your business each year. So if you can get it in sooner, please do. If you don't file at all, if we've asked you to file and you don't, you will get a 10% penalty. And that penalty is not discretionary on my part. The state law says the assessor will apply this penalty for failure to file. So please file with us and let us know. And this is part of the responsibility. I know it sucks to have more thrown on you as business owners, but this is part of one of the things that you really have to do. I hated doing it when I was a business owner, but it is so essential, especially now, if you are trying to get a reduction. What is a reduction? How is it that I, as the assessor, can give you a reduction? Well, in California, there was a proposition passed called Proposition 8 that basically says you can request from the assessor a reduction if you feel it's warranted. It is a temporary reduction only, and you have to request it every year. What I tell people is, as soon as you get your notice from us about what the assessed value is, don't throw it away, look at it. And if it doesn't seem right, reach out to us. I have a rule in my office here that allows everyone, any property owner, any business owner, to ask us for a review of their filings. If you take a look at your assessment and you determine that you think it's wrong, let us know. But you also need to let us know why you think it's wrong and show us some evidence of data that you have that says that the value is actually less. And this is where I was being proactive. And this is where, again, I'm going to go into a little rant about why I need your help. So I reached out. I knew that there were a lot of businesses that were affected by COVID, but there were some that are more affected than others. I'll give you an example. Bowling alleys were forced to close for the last 11 months. We have about 5 bowling alleys in Alameda County, I think 6, but Cloverleaf just closed. So I reached out to some of the bowling alley owners. I reached out to the Granada Bowl in Livermore, Cloverleaf, the owner who was selling the business and closing the business. And I said, do me a favor. Tell me what you have in inventory and what you were able to sell that equipment for. If I could take that information, apply the value of what you sold that equipment for, I can help other bowling alley owners and say that equipment is worth less this year because of COVID. So I can give them a temporary 1-year reduction. Unfortunately, we're still waiting for that information. I've tried multiple times to reach out to multiple business owners of different types to try and get information, and I can understand the reluctance, right? A government official is calling you, asking you for information, and you're not sure if it's going to hurt you or help you. Well, I'm trying to tell you now, I'm trying to help you. I'm trying to help all businesses. I'm trying to help the ones that are hurt the most first. Those that were forced to close, right? You got like yoga studios, fitness centers, movie theaters. I reached out to the owner of the Alameda Theater, and I spoke to him 2 times, and I said, look, just get me the information that you think you have about what the value of your equipment is now. Because I know people are selling this stuff at much lower price, but I don't know what. And I can't just give a reduction without having the proper data, because it will make me look like I'm not doing my job right. And unfortunately, I'm still waiting for a lot of this information from people. So what we decided to do this week is we've sent out about 9,000 questionnaires to different businesses that we know have been really hurt by this, asking them to give us this information. I'm hoping and I'm praying that most of those businesses will respond to that questionnaire and get us the information that we need and the data we need. So how does this work? That was business equipment I'm talking about. The other aspect of a business is the real property. And I know that some of you own the property that your business is in, and some of you don't, some of you lease it. Well, if you lease the property, coordinate with your landlord, right? Because if they bought that property recently, it is probably assessed at a very high rate. And this is how the assessment for real property works when it comes to a decline. So if you look here, you buy the property at year one. From there, we take the value at year one, and we only increase it by 2% a year, every year, by this line. You can see right here, if you can see my cursor. What we know is the market can increase by more than that 2%. So the market increases here in year two, increases by more than 2%, we still only give an assessment with a 2% increase, right? Your increase is going to be capped at 2%. Now, what happens if the market declines in year three? Well, our goal is to try and get that price decline to year three, decreases, right? It will only increase by no more than 2%, but it can go down by way more than that, depending on what happened in the market. But again, this goes to market data. We need the information. We try and use the information that we have in front of us, and we try and be proactive about some of these reductions. Right now, we have asked and have sent out questionnaires to anyone who has acquired the property in 2017 or newer. Our thought process is that if you bought it before 2017, the value that you have right now is still higher. The assessed value is still lower than the market value of that property, even if there's a decline in value, right? We've seen the values go up dramatically in the last 3-4 years, way more than this 2%. So we're anticipating that people who bought the property before 2017 still have a lower assessment than what a drop in the market would see for the market value of that property. If that's a little confusing, let me know and I'll try and go over it in a little bit more detail. But that's kind of the basis of how we sent out 9,000 questionnaires. It's our active process of trying to get the information, to try and be proactive about getting the right values to see if a reduction is warranted. This last year, I was able to convince the Board of Supervisors, along with my colleague, the tax collector, to eliminate property taxes on all businesses with an assessment of less than $10,000. So we're looking at a lot of home offices, looking at a lot of smaller businesses. In my mind, I was looking at, it didn't make sense for us to assess someone and send them a tax bill if they had $10,000 or less in equipment. A lot of accounting offices, alteration shops, these very small businesses, including farmers market businesses at the farmers market, the county fair. We just want to be more fair. And fortunately, the Board of Supervisors agreed, and on December 8th, a little bit more than a month ago, they unanimously passed a resolution concurring with us that we should not be taxing people that have businesses that are that small. I would have loved to have seen this increase to a higher number, but the state law doesn't allow for us to go beyond $10,000 at this point. What happens if you disagree with me? What happens if you disagree with my office on the assessment? Well, like I said, you have the right for an informal review, which we've instituted, but you also have the right to a formal review. And a formal review means you get heard by a third party, but those reviews must be filed timely. Once you get the notice from us in July for your real property, you have until September 15th to file a formal review. During that time, I would suggest that you talk to us first to see if there was something that was missed. And if we still disagree, file the formal review, file the formal appeal before September 15th, so that way your rights are protected. So that's where we're at with business personal property, COVID, and real property this year. And feel free to type the questions into the Q&A and the chat so I can go over them. And so we don't run out of time. Prop 19 was also another big thing that happened recently. And we've been getting over 100 phone calls a day just on Prop 19 alone. So I'm going to spend a little bit of time. I actually have a very long webinar about this on my website. So if you go to the county assessor's website, under the Prop 19 tab, there's a video and about an hour-and-a-half long webinar that I did recently to explain this in more detail. But essentially, Prop 19 passed in November. It has two main components. One was a base value transfer, taking your lower property taxes with you if you're 55 or older throughout the state of California. And then the other was the parent-child exclusion changes. Before Prop 19 goes into effect on February 16th, you can pass on property to your children without it being reassessed. After February 16th, which is in less than 2 weeks, there's going to be situations where your property, once you pass it to your children, it will be reassessed. Just to understand what the current law is. Current law, passed in 1978, allows you to own property without having significant increases in the property taxes. So in this example I use, my parents bought a house in Union City in 1980 for $100,000. Right? They're assessed at $100,000 or $1,250 a year in property taxes. The property is now worth $1 million, but their assessment current year is at $200,000. So their increase in property taxes went 2% a year for the last 40 years, with compounded, so it's about double. So it went up to $200,000. So they're paying $2,500 a year rather than the market value of $1 million. However, if a person bought that house today, the exact same house, and they paid $1 million for it, their property taxes would be $12,500 rather than the $2,500 that my parents are paying. So what does that mean for me? Right? Current law, my parents could give me that house, could sell me that house as their child, and I would be able to keep their low property taxes at $2,500. I'm going to skip through a lot of this. And like I said, if you need more information about this, go to my website. We put up an FAQ sheet. All these slides are on my website as well, and a webinar that we did explaining this. So my parents transfer the property to me. I keep the low property taxes as long as they do it before February 15th or the 16th. Or actually, let me take that back. February 12th and 15th are government holidays. So really, it's February 11th that they would have to transfer it before. If it was a rental property rather than a house they lived in, they can transfer it to me as long as the assessed value is below $1 million, and I would be able to keep the current lower property tax assessment. So all that is current law. What does that mean under the new Prop 19 law? So I'm going to skip through some of this. Under Prop 19, if that is a property they're living in, they can transfer it to me. And as long as I move into that property within 1 year and make it my primary home, I can keep the low property tax basis. If they give it to me and I treat it as a rental house, then I would get reassessed. If that is their rental house, and after February 16th, they give it to me, I would get reassessed. Prop 19 requires a reassessment for all rental properties, including residential, commercial, industrial, vacation homes, second homes, cabins, you name it. If it's not the parent's primary home and does not become the child's primary home, it gets reassessed. That's the quote unquote bad part of Prop 19. There are reasons why some people would not transfer their home to their children now. And this is where I caution people to talk to an attorney, talk to their CPA, because there are a lot of reasons why you may not want to transfer the property. Right? You would lose possession of the home. There are capital gains liability potentially for the children. There are other potential liabilities, right? Real quickly, parents keep the house, the property taxes stay the same. Parents transfer the house to me before February, let's just say 11th, because the county holiday is on the 15th. I keep the low property taxes. If they transfer the house to me after February 15th, property taxes go up. Here, let me go another example to explain that slide better. And I'm jumping back and forth, my apologies. I know we're going to be running out of time soon. So I'm going to give you another example of what happens if the market value of the home is greater than that $1 million. So the same example, but instead of Union City, my parents buy a house in Piedmont in 1980. They buy the house in Piedmont in 1980 for $100,000. The house is worth $2 million now, but the assessment on the house is $200,000, right? Same example, started off at $100,000, 2% a year compounded, gets you close to $200,000. So what happens if my parents give me that house and I move into it and live in it? It's their primary home, they live in it now, they give it to me after February 15th, and I move into it. What is my property taxes? My assessed value then goes to $1 million. Why is that? You start with the current $200,000 assessed value. Prop 19 says you take the assessed value, you add $1 million to it, and the difference between that new value and the market value of that home, market value being $2 million, difference of $800,000, gets added to the original assessed value. So $800,000 plus the $200,000 current assessed value gets you a new assessed value of $1 million. So the property taxes then jumps from $2,500 to $12,500. But that's better than the property taxes if they had gone to market value at $2 million, which would have been about $25,000. So that's this slide here, right? The house in Piedmont. My parents keep it, property taxes stay the same. My parents give it to me before Prop 19 takes effect, property taxes stay the same. My parents give me the house after Prop 19 takes effect, goes up to $12,500. If that is a rental property, or I use it as a rental property after the transfer, property taxes go up to $25,000 a year. Again, speak to an attorney, speak to a CPA. There are property tax concerns with this, right? There's a thing called a step up in basis. I don't want to get too much into it because it's more legal advice and accounting advice and tax advice, but there's a potential for capital gains liability. There's also the issue of what happens if I pass away first, what happens if I go into bankruptcy or a lawsuit or a divorce. So those are things that you have to think about in deciding whether to transfer property to your children or not. Again, be aware that this is coming up as a deadline. The assessor has no discretion in the implementation date. The date was implemented in the law when the voters passed Prop 19. It said it must be implemented on that date. So we're going forward with that. It was not a good thing for our office. We had to change a lot of our computer systems in order to track Prop 19 changes. So we've been working overtime and running, running forward, knowing that we're going to have to do this. The other part of Prop 19 that may help some of you who are 55 and older or disabled or a victim of fire is your ability to take your low property taxes with you throughout the state. Right now, if you transfer your property in the county, if you sell your house and buy a house that is at or below the market value of the home you sold, you can take your low property taxes with you anywhere in the county or anywhere within 10 counties that follow Prop 19, or excuse me, that follow Prop 60 and 90, which is the current law. The new law, and I'm going to go into some examples, allows you to do a couple of things, right? Here's the, one second. Here's one example. You sell your house, you buy a house in Alameda in 1980 for $200,000. It's assessed at $400,000 right now, right? So you're paying about $5,000 a year in property taxes. Your house is worth $1.2 million. You sell your house in Alameda for $1.2 million. You buy your house in Livermore for $700,000. This part of Prop 19 takes effect on April 1, right? So you can change Livermore to any city after April 1. But before April 1, it's either in Alameda County or in one of 10 counties only. For $700,000, you buy your house for. Your property taxes, your $400,000 property assessment for your house in Livermore goes with you to your house, in Alameda, goes with you to your house in Livermore. So you continue to pay your lower property taxes of $5,000 a year. What Prop 19 does is it allows you to not only buy a house that is lower in market value than the house you sold, it allows you to buy a house that's higher in market value and maintain most of your lower property taxes. So how does that work? Same situation, you buy a home in Alameda for $200,000 in 1980. You have a current assessed value of $400,000. Your property taxes are $5,000. Your house is worth $1.2 million. After April 1, you sell your house in Alameda for $1.2 million. You buy a house in San Diego to be closer to your children for $1.7 million. So you just went up $1.7 million. What is the new assessed value for your house in San Diego that you paid $1.7 million for? Your new assessed value then will be $900,000. How did I get $900,000 when you paid 1.7 and your prior assessment was 400? Here's how we got $900,000. You sell your home for 1.2, your replacement property is 1.7. There's a difference there of $500,000. That difference is added to your original base value of 400,000. So you get $900,000. So you still get a property tax savings, just not as much as if you stayed in your home or bought a house at lower market value. So you're paying at $900,000, you're paying about $10,000 a year in property taxes, rather than roughly the $20,000 that you would have paid at 1.7 million. I think I'm gonna stop there because I'm pretty sure you're probably tired of hearing me talk. I'm gonna go into the Q&A, and I don't know if Cindy, you wanna ask the questions? You want me to just read them?
Whichever you are more comfortable with. I'm happy to read them to you, but if it's faster for you to just go through them, that's fine too. Your call.
Okay. All right. So please continue to submit questions. I see 2 questions here. First question is on split roll. So split roll is failed this last year. So for those who don't know, the split roll initiative, otherwise known as Proposition 15, that was on the ballot in November, actually did not fail by much. There were 2 initiatives that dealt with property taxes this year, 15 and 19. I just went through 19 with you. 15 said the assessor will reassess all commercial and industrial properties every 3 years. And how does that affect businesses? Well, and I will start with a preface saying that everyone has their own biases in life. In addition to being the assessor, I still own and manage some property. And in my leases with my tenants, they pay triple net, which means they pay the property taxes on my property as part of their lease. In order to really understand split roll, you have to understand what happened in 1978 with Prop 13. Before 1978, property taxes in California would increase every year to market value, right? There's no cap. If the value of your property went up by 15%, your property taxes went up 15%. And that hurt a lot of small businesses and seniors, right? If you're on a fixed income, you bought your house and your property taxes in your house keeps increasing, it's gonna hurt you. You're not gonna be able to afford to stay in your home after a while. So Prop 13 was passed to, in large part, to help those individuals. One part of Prop 13 that was added that was never publicized, right? It's just how you sell something, was the part that helps a lot of multinational corporations as well. So Bank of America, right, owned their building since 1950. They have a very low assessment. Disneyland has a very low assessment. And I don't believe that was ever intended to help those large corporations, right? So there was a pendulum swing that went way off to one side in 1978, which really helped a lot of people and a lot of large corporations. The idea with split roll was to try and even it. And I think it kind of, what 15 did was kind of went way on the other side. And had split roll passed, I gave the example of the mom and pop taqueria, right? That has a very low assessment because the property owner owned that property for a while. And their property taxes would have gone up tenfold, which probably would have put that small mom and pop business out of business. So split roll, I understand why they put split roll on the ballot. Property taxes, for the most part, fund education. As you can see from my slide there, 42% of all property taxes go to fund education, and education in California has been woefully underfunded compared to other states as a percentage of revenue. But my concern is always, what does it do to small businesses, right? Just because Disneyland can afford an increase in their property taxes doesn't mean that restaurant across the street from Disneyland can afford it. The assessor is not a policymaker. The assessor implements policy that's passed by the voters. So I've always made it a point to try and educate voters about what the ramifications of these initiatives are. And that's one of the ramifications of split roll if it's not crafted well. The people who have crafted split roll have come back to us, the assessors, and said, what are your thoughts on this? And we always give our opinion on it. That, you know, what can we implement and what can't we implement, right? I can't implement something if I'm not given resources for it. So my number one issue always is there a provision in there that provides the assessors with resources, right? About 10% of commercial property right now gets reassessed every year in Alameda County due to a change in ownership or new construction or something. With split roll, that would have increased it to 33%. With the same level of staffing, there's no way I can do the work. So is there something in there that allows the assessor to get the resources that the assessor's office needs to implement it? Whether the voters pass it or not is going to be beyond my control. All I can do is educate people on it. I have my own personal opinions about these things. And I try not to allow people to say that I'm biased one way or the other when it comes to this as the assessor. So I'm very careful about how I phrase things when it comes to my opinion about property taxes, because I don't want people to think that I'm skewed one way or another before I ever assess a property. So I hope that explains split roll in some way. What is the deadline to submit a request for informal review? You can submit a request for informal review at any time, but if you want it included in the next assessment roll, because we can always go back and change something and give you a refund of your money, but that means you paying it first. If you want to prevent that and try and get it correct before the bill goes out, we typically say by May, we need to know, right? Because we finish our job on June 30th, and then the tax bills go out in July. So we need to know well in advance so that way we can make the adjustments before we finalize everything on June 30th. So I typically try and give a deadline of May to ask for informal review. But you can do it throughout the year. We just can't get it in on time if you do it after May. And then it would mean you would have to pay the bill first and then try and get a refund later. Can you show the calculation of the parent-child transfer again?
You know, Phong, this is being recorded and we're going to post the video for it. If you want to move on to more questions, and we can come back to that if there's time, because there will be an opportunity to watch this again.
Yeah, and so just so you know, there is also the slides that I'm showing you on my website too. So you can go to the assessor's website under Prop 19 tab, and all the slides are there as well.
Perfect.
Your parents died on February 1. You inherit the rental property assessed at $300,000, fair market value $1 million, but can't transfer title until probate ends. I'm sorry, this is skipping. Will you be able to take the $1 million exclusion because the parents died before February 15th? Or are you denied because the date of probate is filed? So a couple of things. One, we also look at the death date as one determining factor. And then we also look at the opportunity for you to get the deed in and to get it recorded. So as long as you made the attempt and you have evidence of all that, we take that into consideration. So I hope that helps answer your question. What percentage of a corporations appeal their assessment each year? Ballpark? Large corporations, almost all of them. Since you're in Fremont, I'll tell you this. The biggest appeal we have every year is Tesla. Tesla is also the biggest assessment in Alameda County. Tesla makes up for 1% of the entire property tax roll in Alameda County. We have a $340 billion assessment roll. Tesla is about $3.4 billion in assessments. So I have a team of about 4 or 5 appraisers and staff working on Tesla alone every year. A lot of corporations do what is called a protective filing. Even if they don't agree with us, they file it anyways in hopes of getting a reduction. right? And it sucks, right? Because it's work for us, even though we know we did it right. They know we did it right, but they're just looking for a reduction. And not to say all corporations do that, but I can tell you most large corporations in our county file every year, and they just do it protectively, proactively. Doesn't matter what value I put on there, they will do it. It's just what lawyers do. Speaking from as a lawyer, not to knock my profession, but I've represented corporations as well, so I know what they do, and that's just the way things are. I'm going to go into the chat room now. That was the Q&A.
Right.
In the chat room. Paul has a question. Oh, you're welcome, Paul. That wasn't a question. That was thank you. All right, that's a statement. How does Prop 19 affect the family, the children of the trustor, if the properties and businesses are maintained in a family trust? Family trusts are not too different than if it wasn't in a trust. What we look at is when there's a change of beneficiary in a family trust, we treat that as a change in ownership. So for instance, my mom and dad have a house, it's in their trust. The trust says when they pass away, it gets split between my siblings and I. So the trust still owns the property, but the beneficiary then goes from my parents to my siblings and I. So on that date, there's a change in ownership. So at that point, we will look at, okay, is there an exemption that applies? If not, the ownership change is made, there's a reassessment. So if you have a trust, right, and you list yourself as the beneficiary, and then you decide you're going to list someone else as a beneficiary before you die, we treat that as an change in ownership. So that is potentially a reassessable event. So I hope that helps. One thing I also want to make clear with Prop 19, if you own a house and you want to give it to your children and you want your children to benefit from not having it reassessed, if you own that home in a corporation or an LLC, corporations and LLCs do not qualify for the homeowner's exemption. The homeowner's exemption is how we determine whether it's your primary home or not. So if it's in an LLC or a corporation, it cannot be your primary home ever. So you would then transfer that to your children. They would no longer qualify to prevent a reassessment because you would not have been able to file a homeowner's exemption on that property. So keep that in mind. Talk to your lawyers about that. Where can we obtain a copy of your presentation? On my website, Paul. It's all there. Assume assessed value of personal residence less than 1 million. If parents leave house to 2 children, only one wants to keep the house, can they use non-pro rata distribution being able to reassess? So if you leave your house to your children and there's 2 children, after Prop 19, only one of them is required to live in that house. However, if you have 2 children, you leave it to them and one sells their share to the other, there's a 50% reassessment on that property. So hope that was clear. Raymond, if that's not clear, send me a message and I'll explain that further. But we do proportional reassessments when there's a change in ownership as well. So we get that question a lot. So decide whether you want to leave your house to 1 child or both children, because there's no exception for sibling transfers, right? A parent-child transfer can be excluded from reassessment, but a sibling-to-sibling transfer is not excluded in any way. There's no law that allows an exclusion there. It's treated as if it was 2 strangers when they're siblings. Yes, Brenda asked if there's a form for informal review. Yes, Brenda, on our website, there is a form that you can ask. And if it's for your house, we ask for 3 comparables, some data that you have that shows that the value of your home is actually lower than the assessed value. So we actually need you to do a little bit of work with us because in our opinion, we've already done our job. We've looked at it and we've looked at comparables. But if you feel like you have comparables that are better than the ones we look at, show us, right? And we would be happy to look at it. I also have a policy that if you want to see the data that we use to make your assessment, you have a right to that. So we will scan it in and email it to you if you want to see it. However, here's one caveat. I've had people request data for other people's property. We cannot give you data for someone else's house. So I've had neighbors complain about their neighbors and ask for their neighbors' information, and we can't do that. That's confidential information to the property owner. So even if you don't like your neighbor, I'm sorry, we can't share that information with you. The form you found, Brenda, the form is the 2021. Yes, we are in the 2021 roll now. Send it to us. We cannot, so once you're past the deadline, you have till September 15th every year. That's a hard deadline by state law. So if you ask for a reduction, you got to get in that request before September 15th for that roll year. Gabriel has a question. How will the 1 million amount be utilized if a valid parent-child transfers occur, but only say 50% of the property is transferred? Do you still use the fair? So yes, if you're giving your child half of your house, we will only look at half of your home. So we will look at the value up to that 50% value. And then when you transfer the other half, we'll look at the value at that time and add it to the previous transfer. So if you transfer half now and you're under the million, but the other half you transfer later and it pushes you over that million, we will add that overage upon the next transfer of the remaining 50%. I hope that answers your question. What about 2021 request? We need a count for declined value as of 1/2021. 21-22. So here's how it works. This might be a little confusing. We have not done 21-22 yet. I know we're in the 2021 calendar year, but your assessment in 2021 that you received in July 2021 is for the 2020 calendar year. So we're always looking backwards to the previous year. So the letter you get from me in July 2021 is for your value from January 1, 2020 to December 31, 2020. So it's the previous year's value is what you pay property taxes on this year. So I hope that makes sense, Brenda. That's why we have the 2020-2021 review form, because you're actually reviewing your value for 2020 this year. All right. Oh, you guys got easy questions.
Okay, so there's another, Phong, there's an easy, yeah. I'm sorry, there's another question back in the question and answer.
Oh, I see that. So business personal property. Yes, thank you for asking this, Stephen. This is very important for us in the next couple of months. What kind of questions are we asking for? We're asking for what the value of equipment is. We're asking for what reductions you've had in production. So I'm going to give a scenario. And here's where I'm caught between a rock and a hard place. The law says I'm not supposed to use your revenue in determining your business equipment value. And that's pretty clear in the law. And even though I don't like that provision, I have to comply with it. So even though we're going to ask you for revenue, what we really need is production, right? I'm going to try and find a way, because a lot of people don't have production data, they have revenue data. So we're asking for revenue and production data, but if you don't have both, give me what you have. I'm going to try and figure out a way to use your revenue data and transfer that as production data and figure out a reduction at that point, right? Obviously, if you're making less money, you're making less widgets, right? But we still have to massage that data in order to make it work. And it's something we've never done before. All 58 assessors have these regular calls now, and we're all scratching our heads. Right? We've never been through a pandemic, right? The Great Recession in 2009, 10, and 11 was different. That was, in some ways, that was easier to deal with because it was a reduction in property values during that time. We don't have a reduction in property value right now. Home prices, commercial property prices still continue to increase. We saw an average increase in home price in Fremont. You have an average increase of about 6 to 8% in home prices still. So I'm not going to give you a reduction in your home price because your home is worth more this year than it was last year. Even during COVID, home prices still continue to go up, right? But the problem that we have is your business value has gone down, right? No one's buying a restaurant right now. No one's buying a bowling alley right now, right? So how do I take that into consideration? And that's the hard part right now, right? And I'm gonna give the movie theater example, right? No one's buying movie theater equipment right now. No one's buying a projector right now. So I can't even get the value of that equipment right now during COVID. And no one's buying gym equipment right now. So 24-hour fitness, because they've been shut down for 8 months out of the year, I know their equipment is worth less, but I don't know how much less because there's no market for that equipment right now. So that's what we're asking gym owners to do the best they can to give us their membership information. Like how fewer members are you getting now, right? And we're going to try and extrapolate some formula to figure out a way to legally make this happen. And I have a commitment to be transparent. So once I figure this out, I'm going to make it public on my website. This is how we calculated the assessment for gyms. This is how we did it for bowling alleys. So everyone sees what I did. So no one can say that, you know, I was being unfair in some way. But we need to figure that out internally. So if that answers your question, Steve, I hope that answers your question.
Okay, so Phong, to build on that, are there any provisions for deferring property taxes during COVID?
So I will start by saying that is more a tax collector question. So our tax collector is Hank Levy, and I know last year during the payment date, he put out a form on his website for people to request a delay in payment of property taxes without penalty due to COVID. I am going to guess that he will do the same thing this year, but the discretion for that goes to the tax collector. He's a nice guy, so I'm guessing he'll do the same thing this year. And I asked him how many people actually made the request, and surprisingly, not that many people filled out the form to request a delay in property taxes payments. So if you feel you need you feel you can't pay them right now or this year, the next installment is actually due now for real property. If you feel you need help, please go to the tax collector's website. They do have the form on the front of the website. The last time I checked, it was there still, to ask for a delay without incurring a penalty.
Okay, so we have hit the 1 hour mark now, and you gave us an enormous amount of information in that time. Thank you so much. As I said before, this has been recorded, and it does take a little while for us to transfer it and to get it posted. So probably by this evening, it will be on our website or Facebook. And so you can view it all there. And as Phong said, the slides are also available on his website. I know Napoleon posted that address into the chat room for you as well. So these kind of webinars are extremely important right now to get information out to business owners, because there's so many changes. And as Phong said, this is like, we have never experienced like anything like this before. So, so many new situations and everything. So we are committed to bringing you information as quickly as we can from our government officials and from folks that can answer these questions for you. So I would encourage you to make sure that you are signed up for all the chamber publications. And Napoleon is posting all that information in there so that you can find out what's coming up and what kind of information we can provide for you. It's the best way that we can give you that information. So with that, again, Assessor Law, I want to thank you for your time today. You were extremely helpful. So I just feel like a whole bunch of information, I'm going to have to watch it again. A whole bunch of information just came out so quick.
Let me say, if you have any questions and you guys let this ferment for a little bit in your brain, reach out to us. We're more than happy to answer questions you have. I also send out a newsletter, or I try to every month when we have time, with property tax savings ideas. And we just let you know, here are some ways in which you can save on your property taxes. Sign up for it. Just shoot us an email and say you want to sign up for the newsletter. We'll get it. We'll add you to the list, and whenever we have time, we put out information to people.
Okay, great.
But thank you very much for inviting me here again today.
Yeah, thank you. And Napoleon, why don't we put Phong Law's website address and his email and the information that he talked about when we post it, so that people can go to Facebook. If you just go to Fremont Chamber, we'll post all that information there so you have access to it.
Awesome.
Okay. With that, I'm going to say thank you again. It was good to see you. Stay safe, everyone, and looking forward to our next webinar when that comes up. Have a good day, everyone.